Hello traders, welcome back to my YouTube channel. Thank you so much for clicking. Kindly remember to subscribe, like and comment down below. So guys, today we are going to be looking at how the Forex market moves. So there are only two reasons that the market moves, and that is liquidity and imbalances. So when you look at liquidity, I think there's a video I did about liquidity, or my definition of what liquidity is all about. So that's why we are seeing here that I've already outlined some liquidities, which I'm calling them sell side liquidity. Essentially, they are where loss are taken out. We have sell stops taken out. And that is what we call sell side liquidity. So you can check out my video on what liquidity is all about. So today I'm going to be focused on how the market moves and why it moves. So the two reasons that I've already outlined are liquidity and imbalances. And I've actually come to discover that the market cannot move without liquidity. So if you see a market moving, like for instance, if you see this an explosive move like this one, this was September 2022, around maybe end of September. So when this market hit this level, there's a level of support here. We see that it took out some liquidity, some form of liquidity, some sell side liquidity. So once it takes out those liquidities, that is when the market began to move higher. So actually I believe that the market cannot actually move. You cannot see such an explosive move or such an extended move without the market taking some measure of liquidity. So another example we are seeing is right here. So we're seeing that the market was initially dropping from a resistance level. So if you can check out from your chart, I think there's a weekly order block that was hit in the weekly chart on euro. So it was hit and then the market now started dropping from that level. So once it started dropping, for this market to now again come back and start going higher, it has to take out some form of liquidity for it to now start going higher again. So that's what I'm actually trying to outline today. So the market will always move from a level of resistance to a level of support, and from support to resistance. So actually I'll be doing another video on premium and discount so that you can get a clear definition of how the market moves from this level to such a level up here, and then another level down here, and then how it actually what we call the ebb and flow of the market. So another instance that we are seeing, apart from liquidity, the other reason that the market moves is to rebalance an imbalance. For instance, I can see an example. We have an example right here, right there. So the reason that the market was coming back up after starting to drop from this level of resistance was so that this market can rebalance this inefficiency that was left right here. So there's another video that I did that describes what an imbalance is, or what a fair value gap is all about. But essentially this market was coming back up. The only reason it was coming back up was to rebalance this imbalance. So you see, the market will only move up for that reason alone. So apart from liquidity, you have an imbalance. So I'll also show another example on the daily chart. So let's go to the daily chart, where you'll see that the only reason that the market was dropping, for example, this market was going higher from a support level. So I think there's a monthly fair value gap down here that the daily was coming out from. So once it reached this level, so this essentially a premium level. So once it got into these levels, the only reason it was coming back down here, right here, this was November 21st, 2022. So the only reason it was coming back down here was to rebalance this imbalance. So that's essentially how the market moves. So actually, guys, this is very applicable to any forex pair, or any pair, any currency pair for that matter, and any time frame that you're looking at. So you can go through your charts and just look at a few examples on maybe this concept that I'm trying to outline. So as an example, I'll just go into the gold market. This is the gold 1 week chart. So as you can see, gold has been sort of in a consolidation, but since the beginning of around the beginning of 2022. This was around March. Gold started to drop from this level of some resistance level, and then it was dropping, and the only reason it was dropping was now to come down here. So you see, when the market got down here, we are seeing a response. So this market will not have moved if it did not take out this liquidity and it did not rebalance this imbalance. So that's the reason I'm saying this market cannot move without liquidity, and also the other reason that it moves is to rebalance. So it came down here to rebalance this fair value gap that was left here. This is around in 2020. So this fair value gap was left down here, and then the market on the weekly chart came down to fill that imbalance or fair value gap, and then now we are seeing a response. So we're already even seeing a break in structure right here. So actually we're seeing gold responding very nicely to this level after taking out liquidity and rebalancing that imbalance. So guys, that's it. Thank you for watching. Thank you so much guys for watching. I hope this video has been helpful. If you enjoyed this video, don't forget to like, subscribe and comment. Also let me know what kind of content you want to see or any suggestions you have. Thank you.